This is the Oakwyn Podcast, featuring Morgan Brown and Michael Yu.
Welcome to the Oakwyn Podcast. I'm one of your hosts, Michael Yu.
And I'm Morgan Brown.
And I'm the Podfather.
And we have a very special guest with us today, Sherlock Yam.
Yeah.
Thank you guys for having me.
Yeah, he's a mortgage broker, a mortgage extraordinaire. Sherlock, how long have you been doing mortgages for?
It's close to, I would say, maybe 15 years or so. Started off in the
Okay.
banks and came out and became a broker.
Yeah, that's like, I'm in the industry for 15 years too. It just flew by,
It goes
hey?
so fast.
Yeah.
You guys are old.
Yeah.
I'm like 13 years, whatever.
Yeah. Sherlock's one of the only Asian guys that I know that can grow a beard.
And well.
You know what?
Yeah, that's
I
nice.
well.
trimmed it down before coming
Oh,
because
really?
I knew
That's
you
a
guys could
nice-
record it. Otherwise, it was just like, COVID beard.
Yeah, that's a very nice beard, actually. Yeah,
That's pretty good. I like it.
Sherlock, you have been, number one, I'm so thankful for you because you have assisted so many of our Oakwynites.
Oh my God. Thank you guys for allowing me to
my
help
God.
them. It's
And,
been such a pleasure.
Like, you are part of the family.
Oh,
100%.
You guys really make me feel like part of the family. So
You are. And
very
we're
appreciative.
so thankful because there's a lot of people, like, maybe you can give us a little brief summary of where you came from like 15 years ago and what got you into doing mortgages.
Yeah.
Yeah, for sure. My background, my mom actually worked in banking. So I kind of grew up with that. And she was, I think, 30 years or something like that before she ended up retiring. But that was really what got my foot in the door. When I was studying, I went to Capilano University, did my business degree there. And while I was finishing up, I thought about what I wanted to do. I actually worked at Cactus Club for quite some time
Amazing.
while
Oh,
studying.
really?
And then I decided, before I graduated, I should actually get my foot in the door and work at the banks as like a teller or customer service rep. So that's kind of what I did.
Wow.
Yeah.
So you went from the banks first.
Yeah. And that's kind of where I started. And as I...
Which bank?
TD Bank.
Oh, okay,
Yeah.
cool.
So I was there for several years before I came out.
So
Yeah.
started as a teller then, and you kind of went through like what's that? Like I always wondered. I applied to work at the bank when I was young. You got rejected.
I believe
Then
it. I
went
believe it,
with
people.
It's because I went with my first choice.
What, Van City?
No, Subway sandwiches. And I worked there for a long time.
That's awesome.
I remember asking you about that. You're like, the bread is not good.
Don't eat that bread, guys.
Don't eat that bread. Like, why?
with the
He's like,
pita.
"What's in it?"
That's
Don't
so
eat that
funny.
bread.
That's so funny. So, but TD, like you probably still use TD quite a bit.
We do,
now,
yeah.
right?
Yeah.
Like,
I'm just so grateful to actually have spent so much time working at a financial institution because it gave me a great background on how mortgages work and how they actually underwrite and determine risk on these types of applications. So
Okay, you gotta wind for the layman's. What's underwriting?
Tell me what is
What is
underwriting.
underwriting? What's risk? I don't
yeah,
know.
yeah. So, for when I was at TD Bank, I before I graduated, I actually applied to get into this financial advising program. They only select, I think, 40 people out of 400
Wow.
into this program. They're looking for, obviously fresh blood, fresh graduates. And in that program, you actually have to be mobile. And because they pay for all your training, they move you from different branches to learn everything you need to learn. And it was a senior advising role. It wasn't, like a junior sales role. You learn to be management. You learn to be a financial planner, financial advisor. You deal with small business
Wow.
accounts. You open and close branches. So there's a lot of responsibilities. So
Okay.
that's why they only selected about 40 people. And with that, you needed to be mobile, which means you could be shipped out to the Yukon or anywhere in BC. Wow. And that was the requirement if you wanted to be part of this program.
And you were accepted to this
Yeah,
program?
and I was accepted in this
Wow,
program.
okay.
The starting salaries were much higher than if you climbed the corporate ladder. So
okay.
it was really good. Obviously through my mom, she kind of told me about this program. So I applied and she kind of coached me on how to do the interviews.
Okay.
So it was great. And I learned kind of everything I really needed to know to determine which avenue I wanted to head towards, whether it be branch management, small business banking, financial planning, mortgages. So I obviously kind of chose the mortgage route.
Right.
But that was after doing 3-4 years of financial advising.
So why did you choose mortgages?
I felt the most rewarding helping first-time buyers getting into their first home. That was one of the biggest things for me was during that process, every time I did a mortgage, I felt way more rewarding than if I was to help somebody invest in,
stocks
or mutual funds and stuff like that. And it was during that time, 2008, that was a crazy time during the housing crisis.
That was crazy.
And I think we're pretty fortunate being in Vancouver because it rebounded pretty quickly. And so we did a ton of mortgages and kind of saw that crazy cycle back then when you didn't need income to qualify. You can actually show zero income and still get a mortgage if you had 35% down. So it was kind of nuts.
Forget about those days.
Yeah.
Right? You really do, like, about the zero down.
40 years to pay off your mortgage. 6% was normal back then. Then the market
6%.
crashed. Yeah. So
I find it so interesting that you had was your father in financing too? Or
no. So my father had his own business and he was kind of like the creative side of our family. He did professional photography and he had a photo lab as well, producing photos for when people that needed to have the photographs.
So like there was a dark room.
Yeah, dark rooms and that kind of stuff, the machines and stuff like that.
Oh my gosh.
Yeah.
And your mom was like the accountant.
Yeah, my mom was the banker. Yeah.
You had a very cool upbringing.
Kind of a bit of both. And that's why it really helped me, I think, now in my business because, there is that element of it's your own business, right? It's your reputation on the line. Right. You have to exceed and excel in your customer service and, the services you provide to everybody.
Oh, great.
And then the banking side obviously is very important. So I kind of feel like it's very interesting now if you're a new broker coming into this industry with no financing background. It's pretty challenging because the banks are just getting tougher and tougher.
They're getting tougher.
Like the stack of paperwork we have for each file used to be maybe 4 pages, pay stub, and that's pretty much it. Right. And now it's like everything, including your firstborn child.
Oh my gosh!
So blood work, like
blood work,
right?
Yeah. Blood type,
genetic testing. So I want to talk about the first time. So for you love working with those first time buyers. So what is a first time buyer like? What kind of stuff do they need to give to a mortgage broker? Like, if they were interested in buying their first place?
Good question.
Yeah. It's pretty straight, depending on the person. There are a lot of people who potentially could be self-employed or working as an employee of a company. And if you're an employee of a company, it's pretty easy. It's pay stub, job letter.
2 years, right?
No, actually, if you're employed, like an employee of a company, it's just a pay stub and job letter, as long as you're not on probation. So
just one pay stub.
Well, if you're in salary, yeah. And then down payment documents, so bank statements, right, to show that you've had your down payment available for the last 3 months or so. And it depends on how much down payment you have. So it's pretty easy, I would say, if you are a salaried employee.
Okay.
But where it gets challenging is if you have your own business. Right. That's where you need to have the 2-year average. And unfortunately, if you haven't planned 3 years ahead to buy a property, your accountant's going to teach you to write off as much as you can. And that's the income that you're going to be able to use to qualify for mortgage. Yeah. So I think the biggest hit sector was definitely the small business owners, and that has been like that for the last several years. The banks have just gotten tougher and tougher on looking at what your net income is versus what your gross income would be. So it's pretty challenging.
I find that so upsetting to me because I have so many small business owner friends and people and that are really trying to create this incredible culture and community in the city. And they're the ones that get kind of like what is it? The end of the stick or whatever it's called.
The poo end of the stick, I believe is what we said.
Terrible.
We can't swear on this podcast.
Are you
can if you want, but I'll beep it out.
So tell me, since the pandemic, has things changed at all with those, obviously with the banks and being able to allow for financing? Has that changed immediately? Like, did it change as soon as COVID came in?
Yeah. So kind of going back to your earlier question, what is underwriting? Underwriting essentially is, the bank's way of determining whether or not somebody can qualify for a mortgage. And they'll look at your income, they look at your credit, they look at, as much as they can. So with, the pandemic happening, even if you were a salaried person, depending on what industry you're in, the banks were actually wanting to know, have you been affected? So were you laid off for 3 months and then came back, even though you're a salaried person? So that provided some challenges. It's the first time that many of us have, I think in most lifetimes I've ever going through something like this. So the banks themselves didn't know how to handle this.
Wow.
And so they were trying to be a lot more conservative than than they should be.
Right.
But as we got to, the tail end of 2020, they were starting to loosen up a little those restrictions. But yeah, they definitely wanted to find out, okay, are you still employed? That's first and foremost. Second of all, if you were laid off for 3 months, what's to say that you aren't going to get laid off again if your sector is being hit? And that was like teachers, service-based people. It's definitely
so it's hard
super
to predict
challenging
if you could get a mortgage or not unless you kind of go through that process. That's insane.
And a lot of people were pre-approved before that, and maybe they were laid off because maybe they're working in the gym or
did they have to prove their employment?
Yeah, that proved that they were hired back on and that their salary would continue, but their year to date on their pay stubs would be much less, and would have to explain the situation.
Goodness. Right.
It was pretty challenging.
Pretty challenging.
Yeah, definitely. Yeah. But I think now they've kind of eased up a little bit on the salaried employee side.
Oh, that's good. Yeah. That's really good.
Yeah.
So I think I'm curious about when we talk about businesses. So like obviously most of the people that listen to this podcast are realtors and business people.
Yeah.
So like let's say a realtor wants to buy a property, like it's really challenging, right? For approval. Like give us some tips on like what a realtor can do to make sure that they can get an approval for a mortgage.
I think our circle, our industry has been super challenging to get a mortgage because we are like business owners.
Yes.
Right. So if you haven't been planning for 2 years or 3 years and you haven't worked with a mortgage broker and an accountant together to make that happen, a lot of us weren't able to take advantage of the opportunities that kind of came with 2020. And that's just from the bank side, but obviously as a mortgage broker, we have access to, I would say, 3 tiers of lenders. The bank lenders are always going to be the ones that are the toughest, right? 2-year average, taking a look at your net income, and that's what you're going to get. Then there are the second tier lenders, which we commonly known as B lenders, and they actually charge a higher interest rate to account for that risk. But they're willing to look at your business income. So, if you're a realtor and you've, cleared $300,000, $400,000, but you actually only paid yourself $80,000 a year, they're able to look at that $300,000, $400,000 versus the bank side, which would look at the 80. But of course you pay a bit more for that, but that means you can buy now versus waiting 2 years. So you kind of have to analyze the risk. Is it worthwhile waiting for 2 more years to be able to then qualify? Not only that, increase your income too for the next 2 years to be able to qualify for mortgage. And what comes along with that is higher taxes that you have to pay the CRA.
Yeah, it's like almost the same wash.
Well, exactly. People. It's either you pay the bank higher interest or you pay the CRA. So, you can have your pick.
Yes.
But I know most realtors that I know, because of certain opportunities that have come with COVID, I would say like downtown high rises, 1.5, 2 million, they're on discount, right? So they want to take advantage of that opportunity. So they go with these second tier lenders, pay 3 to 4% versus the banks at 1.5%. So it's kind of like double. It's a high number when you look at the percentage versus double basically. But not too long ago, bank rates are at 3%.
We're at
so
3.5.
really,
it's
not that bad, right? And if you can buy now, and if it's an investment property, you can write off the interest. So there's definitely a lot of pros, if you decided to go with a second tier lender in our kind of industry as a business owner, realtor, mortgage broker, that kind of thing.
Or is it that I remember hearing just in people that some people go to B lenders for a year and then about a year later, right?
It can be a band-aid solution. You if you want to buy now because of a great opportunity, then you can get it now and then eventually gradually increase your income so that you can move that mortgage over to the bank afterwards, right? So you do B lending for 2 years. You get your 2-year average and then move it over to a big bank.
Move it over.
Yeah. So, I think, Sherlock, you have a really good tip, which is basically, think about that 2-year window instead of just, a lot of agents, they have a great year and they're like, I'm in the market now.
Yeah, exactly.
I'm in. And so, but really looking at it from that 2-year span, because you need the historical data to be able to justify the purchase, right? And, maybe looking at the cost benefit analysis
definitely
of whether or not to have that higher net income to be able to get a mortgage at a lower rate, or to kind of look at it from the taxable benefit of maybe having the alternative, right?
Exactly.
Which is cool. You mentioned 3 tiers. Was there a C level?
There's definitely a C level. There's a private lending side.
Is that like backyard kidney stuff? hey, like this guy is gonna take you, break your thumbs.
We don't talk about the scenes here.
Rocky Balboa is coming to
collect. A and B.
Tony's at your back door. Just looking for your mortgage payment. So everything obviously is legal. Private lenders are essentially people who have some money that want to invest in and become a mortgage lender themselves, and everything is registered with title and that kind of stuff. So for the most part, if let's just say in a very difficult situation, and I have had this come across some of my clients during COVID, you are in this amazing relationship, you decide to buy a property together, COVID hits, you realize you hate each other and need to separate. So banks and even B lenders, they want to see if you do end up separating, having a separation agreement and agreeing to what the spousal supports or child supports are going to be. Now, if you're going through this process, it can take quite some time, right, to come to a mutual agreement.
Right.
And during that time, while you're not living together, you probably want to live separately. It can be pretty complex and challenging. So with these private lenders, as long as you have roughly about 35% down, they don't care what your circumstances are, because to mitigate their risk is essentially the large amount of down payment you put, and the higher rate that they charge. So that's kind of the last tier, and they kind of help where people are in such a tough spot. And that's just one example. Yeah. And these could be individuals. These could be companies or a group of investors that get together, or they can be just pretty large, like lending institutions as well. I've seen some rates as low as 5% now on a private lending side, and they used to be 8%.
Low.
Yeah, they used to be 8%. So it's not too bad. And there are lots of situations why people kind of need to go through it. Maybe super bad credit. You have, sometimes you owe maybe $100,000 to CR tax, but you can't do that unless you get your settlement from maybe the separation. And, there's just many situations where it might come in handy. Yeah. So exactly. I don't ever...
You get into when people come to you, you hear some pretty...
There's some crazy stuff.
I know, because you see it more personal. I think it's more on the finances, way more personal.
Sometimes we're a psychiatrist, just listening. But it is very interesting. And it's just... I'm just happy to be able to come up with some solutions.
Yes.
Versus if, you went to the bank, they'd tell you essentially their policy and that's it, or the highway, and really don't give you an alternative. You can
tell us the difference between working with a bank mortgage broker, like a TD rep or an RBC rep or whomever rep, a Scotiabank rep, or mortgage broker. What you do, because you work in the banking.
I think RBC is a good one compared to more, because you guys still can use Scotia and TD.
And TD, exactly. Yeah.
Very different, right?
And credit unions, right? Coast Capital, stuff like that. But I mean, the biggest difference is I always, and there's a lot of realtors on this podcast, right, that would listen, right? So I always like to relate it to if you're taking your client to see a pre-sale site, right, a development, right, and your client wants to buy pre-sale. Now you as their agent are going to show them a bunch of different developments, and whichever one they choose to go with, you're totally fine with that because you help them get the best option, right? And you as their agent are looking after their best interests.
Right.
Now the banks, I would say, they're almost like the developers. They're going to do everything they want for you to buy their development. They're not going to tell you what the next developer is doing, any incentives they're offering. That's what they're there to do. The bank reps are hired by the bank as bank employees to look after the best interests of the bank, right? So,
so they're the sales agent people in the pre-sale.
Exactly. Yeah, exactly. And as brokers, we're like you guys as the realtors, right? It doesn't matter which bank you decide to go with. I give you 10 different options. You choose the fifth bank, we're happy with that. We helped you get the best option.
I've never heard of it that way, and it's so refreshing.
Right?
That is so refreshing.
It's easy to relate to, right? From a realtor standpoint. Yeah.
But for general public, I think you're able to get the lowest rate across the board.
For sure.
Right?
Yeah. So with when an application comes in through a mortgage broker, let's use example like say TD. Right, TD gets an application through a mortgage specialist versus an application through a mortgage broker. Now, right away, when the bank underwriters, the people who actually determine the approval and the rates and whatever of this application, they know that a mortgage broker, we're going to be sending the file to multiple lenders already. So they know right away that they're going to be competing for that business. Whereas a mortgage specialist, they're hired by the bank to only push that one product. So really there's no competition
incentive,
really.
You know what I mean?
Yeah, exactly. You know, obviously the mortgage specialist is, you know, there to bring in business to the bank. And yes, they're going to have to grind the rate down sometimes as well, depending on the situation. But for us, right off the bat, they already know they're competing. So that's kind of where we do get the kind of better upfront rates. But even beyond that, we can get even further rates if we are in a more competitive situation, right? Because like say RBC is doing a crazy rate special right now. So then we might have to even grind down the rates even further with TD Bank, lower than that what they would be comfortable offering. So
love it.
Yeah.
So how liquid is the market right now in terms of being able to offer mortgages and stuff like that for different institutions?
Yeah, the banks surprisingly are not their funds aren't as limited as it was back when it was super hot. Like you remember in like 2017, appraisers needed a week to get in because they're so swamped, and banks needed 2 weeks to get an approval. So surprisingly, it hasn't gone to that point. So although there's a lot of transactions to be had, a lot of transactions that are actually being submitted, they're able to handle that capacity. I think it's because they learned from like 2017 when it was super busy in 2016. And I think a lot of their employees have converted to working from home. So, you know, it gives them a little bit more capacity to handle more files. So yeah, I would say it's not, and it depends on which side of the coin you're on. On the mortgage broker side, because we have access to so many different banks work at different speeds. Different banks have different capacity to handle, you know, the amount of transactions. So some banks are quicker. I've spoken with many mortgage specialists that are my friends as well, because I've been in the industry for so long, and they're telling me on their side, because they work at the bank, their underwriting centers are completely slammed, that they may need a week to get an approval. But I think it just depends on the time.
People are saying almost, what are they saying? Yeah, 5 to 10 days now at the bank.
Sometimes, yeah.
What?
How quick's your turnaround time?
Yeah.
I actually got approval in 2 days, and that's like, I'm still getting those quick turnaround times. Yeah. So it's
because of who you are.
No, I don't know.
Because you're so good.
We have a big team too, right?
Yes. So let's talk about your team.
Yeah.
Let's dive into your team. So what made you leave the bank?
Yeah. So, you know, I was mortgage.
Who made you leave the bank?
Yeah. It was an interesting time for sure. And I kind of went through that when with the housing crisis in 08 and all that. And we stuck through that. And every year after that, it got tougher and tougher.
Okay.
The banks, you know, if you're a mortgage specialist, you don't have any other options but that one particular lender. So if they decide to tighten up their rules, that directly affects how much income I make. So I think because of that, a lot of us who are mortgage specialists decided to slowly kind of leave and explore the mortgage broker side of things. So that's kind of when a few of us left, and me, my other business partner, Win Louie, and Richie Wong, we all left kind of together and, you know, created a kind of a team within the brokerage. And it was really just 4 of us to begin with, and now we're at 13. So yeah, we took on, you know, 6 new mortgage brokers in the last year. We have, I would say, 3 full-time staff that help us do the underwriting and, you know, that kind of stuff. So yeah, so it's been pretty interesting, and you know, we're happy that we've been such a great team to be able to handle this amount of volume. We've definitely streamlined the process so that we get quick turnaround times. Like I said, 2 days. And sometimes when, you know, your realtors will know, like, oh my God, we're multiple situation. Like,
we need to know
what can
now.
we do to make this offer sexier, right? And the shorter the subject removal period, the better, or possibly no subjects.
Yeah. So tell me the difference between working solo and independent, and now kind of working on this pretty big team. You guys are you guys the biggest, one of the largest teams?
No, there's definitely a lot of big teams out there. Okay. But in terms of the amount of business we've done as a team, you know, we did 200 million last year, which was a really great year. And that's,
great year.
Yeah. Over 400 transactions. And, so it was really putting us to the test, but we did the same amount of volume in 2017. So we kind of learned from that. We kind of went through growing pains and, you know, took on more staff and streamlined the process a little bit further to be able to handle that capacity. So although 2020 was almost a record-breaking year for us, I think we were less stressed just because we were able to handle, you know, the volume better. But yeah, and that's kind of like when you're talking about how big our team is, like a lot of people look at it from the volume standpoint, and then there's also the amount of people that you have on your team. So there are other teams that have like 20 something people on their team.
They do.
Yeah. But maybe their volume's not as high. I know. It's just,
How do you manage all those people, Sherlock? Like what's the...
Yeah, it's tough. I mean, I'm lucky to have, such great business partners, and, Wynn and Richie and I, we mentor our newer mortgage brokers, and it's kind of going back to what I was saying earlier. It's really hard, I think, as a new mortgage broker coming in during COVID and not having any banking background, looking through a T1 general that's 30 pages. How do you know what each page is, and what notice of assessment is, or notice of assessment versus notice of articles, which is something that you have as a company owner.
Company owner.
You have your own business. So just stuff like that. It's really, really interesting. It's really difficult for sure. The learning curve is steep, but I think that's...
I see you as a mortgage broker, but I also see you as like the business manager on that team. Like, would you say that's right?
I would do more the business development side. You would never see Wynn do a podcast. Rarely, I would say.
You're like the president.
I'm like the face. I like to do the interviews, the TV interviews with Global and podcasts and stuff, and YouTube videos. So I would say I'm the person that's more comfortable. I don't know if I'm good at
You're
it.
Great.
I don't know if I'm good at it.
You're the beard behind the business.
I got the beard behind the business, exactly. Yeah. So, so I think that's kind of like my role. Obviously, mentoring and business development, but also the mortgage broker, right? I'm always the one that's going to be talking to your clients and keeping you guys up to date with what's going on with their situation, so that you guys can make quick decisions if you're in multiple offers.
I think that everyone knows of your billboard when you drive down Terminal.
Oh my God, yeah.
Oh my God. Well, I see it every day because I literally take that route every day.
Really?
And I'm like, hi, Sherlock.
I think we're so fortunate.
You're like well, you've had a
Terminal.
couple. You've had a couple, but the one that is now right is the Terminal, right in front of McDonald's.
Yeah. It faces Science World. So when you're like driving on Terminal and going on to Pacific,
it's the best billboard.
It's such a great billboard, and we really lucked out with that one. And it just came to us by chance. And once we secured it, we keep renewing earlier and earlier and earlier.
Yes.
You can only do 1 year at a time, but you get first right of refusal. So that means you get first dibs on to renew or not. And they get targeted all the time.
Has it helped the business?
Interestingly enough, I think it's just more recognition.
Yes.
We don't get cold calls. Like all of our business comes from referrals from you guys, from Realtors, right?
Yeah.
And as much as we'd love to have cold leads and stuff like that, it doesn't really do too much. Like the billboards don't really bring in the business. It's just recognition.
But it's more even to like me as the agent.
Yeah.
I'm like, I should reach out to Sherlock.
Yeah. Exactly. Yeah.
And now he's here.
Yeah. And we had a few for sure billboards, but I think that one definitely caught more.
Yeah.
And also the SkyTrain runs through there. So I have a lot of my clients like, I saw your billboard riding on SkyTrain. I'm like, I totally forgot. They can actually see it from the SkyTrain.
It's such a good spot. Like, it's a great spot. You guys are really lucky to have that.
Very fortunate. Yeah.
And you guys, there's so many of you, all good looking people.
And we have to update that billboard. No, we're definitely not all good looking people.
Who's talking
hiding behind the beard. Like the beard helps. If I shave it off, I look like like a 20-year-old
you should be so proud.
kid.
13 associates is a big deal. It's a big team.
It is a big team. Yeah. So we
team.
definitely have to update that billboard. And I think at that time we only had like 7 of us. But,
So you and your
everybody.
2 business partners have been in business for how long together?
Together, I think about 8, 9 years or so.
Has it gone
Wynn and
by
Richie
fast?
have been together longer, but it's gone by so fast. So fast. Oh my God. Yeah. And
what's your
just
dynamic
very fortunate.
between the partners?
Yeah.
For the most part, Wynn obviously is the principal, and that's why the team name is under Wynn Louis Group. And he's done a great job building and bringing in new agents and growing the team. And then Richie, for the most part, he's an amazing mortgage broker. Like, he's so knowledgeable. He has more years under his belt than I do. But he's come across so many different situations. Like, he's probably heard it all, and
like an encyclopedia.
Yeah, definitely. And me working alongside them as well, I've learned so much. When I first joined the team, like, holy smokes, like the amount of stuff that you see. Imagine like 400 transactions. Like, you're going to see a lot of really interesting stuff. Recently, I helped a client that purchase it's almost like a boat shed. It's kind of interesting. It's like a floating home, but not really.
Okay.
And I've never done one of those deals before. Yeah.
Yeah.
It was refreshing because I've never actually done something like that before. And I was so happy to be able to come up with financing for them.
Yeah.
They actually spoke to like 4 other mortgage brokers. Nobody could get it done. The bank said that they could get it done. I think they spoke with BMO, TD. They're like, no problem. Subject removal date came. They said, sorry, we couldn't get an approval.
Wow.
Kept getting an extension. And I was kind of in and out of that transaction. They were like, okay, great. Sherlock, try to do your thing. I'm like, okay, I'll do my thing. And I got them an approval. They kept shopping around because the banks kept telling them it would be no problem. We can get a lower rate. But at the end of the day, they couldn't get it done. So I was just so happy to be able to help them purchase. Cool. It was their dream home too, like right on the water, beautiful views. It's perfect for that couple, and I'm super happy for them.
I love how you're okay with them going to. Do you know what I mean? Like a lot of some brokers I know are like, oh, like you can only work with one. You're like, no, go for it.
No, for sure, yeah.
You can't control them, right?
Exactly. I think that's one of the things that is maybe my strength is I'm not going to be, pissed off if they went somewhere else. I feel like I've been in the business long enough where, if you want to shop around, great. I'm always here for you. Even if I don't get your business now, hopefully I'll get it later, or maybe you'll send me your friends, right? And it has happened quite a bit of, it has happened, obviously, where maybe their own bank, because of the relationship that they have, that they got a better deal and just way better than what we could have done. And, we always keep it very amicable. Just congratulations, super happy for you. I hope you loved our services, and think of me for the future for your friends and family. And sure enough, you definitely get those referrals.
Yeah, isn't it amazing?
Yeah, that's a really good attitude, and it's about building that relationship.
It's all about the relationship,
burning the bridge, right? Because a lot of people, they get like seriously offended.
No,
I think you know enough about me that I love to network and I love relationships, and I love building that. And it's not just about the one deal. There's just so many circles of people that are out there that it can come back tenfold as long as you do a great job with the customer service side and the advice piece.
Yeah, I think Sherlock does a great job of just having a really great reputation, and I feel like a lot of people don't really think about that. How important that is, specifically in Vancouver,
super important,
where we're from.
Yeah, born and raised here in Vancouver, right?
Where were you born?
I was born here. Yeah, it's actually Grace Hospital, which I think is now
here,
Morgan and I were too.
Yeah,
yes,
exactly.
I know, on Oak.
Yes, exactly. Which
That's
is now
Oakwyn.
That's right. Now it's the BC Children's, right? It used to be called Grace Hospital.
Did you grow up in the city?
I did, yeah. I grew up in East Van. I went to Templeton High School, super small high school. Nobody really knows about it, except for when they started filming Smallville there. Yeah, exactly. And then they started getting a ton of money, and now they have a great film program there. And
it's a huge film program.
Huge.
I went to high school with one of the stars of Smallville.
Oh, I did?
Kristen Kruk.
Oh, yeah, that's right. Yeah, she's from here.
I look like.
Yeah. Sorry?
Yeah.
Didn't you say something about me?
Yeah, you kind of have some. Actually, because you guys are both half.
I'm half.
Yeah.
You're better looking.
I'm a happa. I love you, Sherlock. I hate you, Mike.
You look different.
I was actually in a lot of Pilates classes with her.
Oh, really?
Downtown. We were always in the same class. It was so funny. And she dated one of my friends, which is very funny.
It's really such a small world.
Yeah. It's just Vancouver's so small.
Yeah. It is very small.
Dating a celebrity must be the worst thing ever.
He said that.
Yeah,
he said
for
that.
sure. Like
he moved back to London.
Yeah, like why? Like you're just gonna get stopped, and it's like so annoying. You're like, here, hold my bag. I'm like,
Well, it's also like a celebrity. There's like a celebrity like mindset too of that other person. Like I'd be like, oh well, I can't go there because of this. That's what the problem was with her.
Yeah.
Anyways, we can get into it. Well, we're so
talking smack. Next on the Oakwyn podcast.
2021. What do you predict for our rates? I mean, that's what people want to know.
Yeah.
Tell us, lead us out with something hopefully positive. But.
Yeah, for sure. I think if you haven't seen the reports from the Bank of Canada, they update. They do a rate update every 6 weeks or so, and they talk about what prime rate is, if they're going to change it, what their outlook is. And it sounds like the rates aren't going to change for the next 2 years, like 2023. Which is really
2
good.
Years.
Yeah. I mean, obviously we're in this crazy economic situation. We don't know if we're at the end of or the middle of this pandemic. So, there's a lot of recovery that, needs to happen. And, if the government increases rates, that's going to affect a lot of businesses and a lot of people. So I think they're very cognizant about that, and they wanted to keep it as low as they can for as long as they can and gradually increase the rates. And that's mostly to do with variable rates. So I think that's the most popular product right now is variable mortgage rates, because it does kind of stick with the rates if they do stay low. Whereas if you chose fixed rates, they're more dependent on like bond yields and stuff like that. I've seen some banks actually increase their fixed rates recently, which is kind of interesting. But imagine being that client that chose the fixed rates because they're nervous about, the rates going up, and then for the next 2 years rates go down, right? So even some of my clients that chose fixed rates in October kind of already regretted it because rates kind of continue to go down.
Because people, I think a lot of first-time home buyers, they think it's like, this is a great rate, we want to lock it in.
Yeah. And for the most part, if you are the type of person that just wants to set it and forget it, hey, 1.5 is amazing. Like, who cares? Lock it in for 1.5. Sure, it might go to 1.4 or 1.3, but it's still really low relatively. So I would say it's really dependent on your risk tolerance, just the type of person you are, if you don't want to take that risk. But variable rate mortgages do allow you to convert to fixed at any time. So that's what's a way more flexible product. The rates are a bit better, and you can ride the low interest rate wave for as long as you can. Yeah.
That's great. Maybe on a final note, so financing for Realtors 101. So like, let's bring it back to this. Here. So like, what does a realtor need to know about financing, about mortgages? Like 2 or 3 things.
For their clients or for themselves?
For their clients, for their clients. For their
clients, definitely first thing and foremost, get pre-approved, right? Because as realtors and as newer agents, you probably want to make sure before you spend all that time with them to find out that they have been qualified to go up to this price point. Especially with how competitive the market is, that's super important. And so that's very first step, right? Generally speaking, this is something that I tell everyone. Usually what you can qualify for in terms of a mortgage is 5 times your annual income. It's kind of increased now to about 5.5 times your annual income, but that's assuming very little debt, like no crazy car leases and, loans and stuff like that. So that's a good number that you can kind of gauge if you want to, if you feel comfortable asking your clients, and, they can kind of tell you that, and you can do the math in your head. But that's based off of having, but that's based off of having 20% down or more. When you have like anything under 20%, 10%, 15%, that drops to 4 times your annual income. So that gives you a little bit of idea of if they're looking way outside of the price point.
That's such a good gauge. It's a great tip.
And to this day, sometimes I still get people who, they get sent over to me to get pre-approved. They're making a great income, like 6-figure income, $100,000 a year, which is way more than the average here. But they're looking for $1 million home with only $200K down. Like, that's not going to happen. It's going to be pretty challenging.
What is the average income now for Vancouver?
I think it's still 60, 70. And it's probably less now with how many people that have obviously been laid off and all that. Yeah.
Well, I think on that note, thank you so much, Sherlock.
Yeah, my pleasure.
Being a part of the podcast.
Thank you so much.
I'm part of the family.
I know.
I feel
thank you so
lot
much.
Smarter now.
Me too. I feel like it's because he's so dressed up and we're like kind of bummy today.
I came in my PJs. This is what I sleep in.
Okay, nice. Yeah.
Of course you look like that.
Tuxedo t-shirt. And on that note, guys, thanks so much for listening to the Oakwyn podcast.
Thank you, guys.
If you've enjoyed this podcast, please rate us 5 out of 5 on the podcast platform you're listening to it on, and give us a rating as well if you can. And if you are interested in Oakwyn, go to
Oakwyn.com/join and go ahead and rest into that message box, pod 2021.
Right. And you'll get a free piece of mystery swag gift.
Nailed it.
Perfect. Nailed it. Yeah, we hit that landing. Okay, guys, thanks so much for listening. See you later.
Thank you. Bye.